Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. Happy Monday. Remember, please subscribe to us on YouTube. If you're watching the video on YouTube, you'll be able to click that link. And if you're watching it from our website, we have a link for you to direct you to the YouTube. And please click it. We'd love for you to follow us, and we'd love for you to help us build our following. Let's get to it here. We have a little bit of volatility to start the day, start the week off. The S&P and NASDAQ were extending some of those moves on Friday, but the market came back in a little bit. Ultimately, it was the resistance that we saw the S&P run into, and this was the resistance that we had, major three-star there on Friday, 46.78 to 46.84. Price action traded out above there overnight, and it quickly gave it back up. We're looking at this, 84 to be a point of balance still, and if it stays below there, then, it's more of a consolidation. But furthermore, we have our momentum indicator aligning as first key support in both the S&P and the NASDAQ, and we're decisively below those at the moment. So keep an eye on those levels, those first key support levels detailed in the Morning Express. If we stay below them, then we're likely to consolidate a bit lower. But again, a lot of support underpinning this, a lot of support that was at 46.20 last week in the S&P, and we're sort of building more support as it climbed higher late last week too. So today's close is going to matter, but keep an eye on those first key supports in both the S&P and NASDAQ. And by the way, you have the Russell 2000 trading below 2,400. That stalled at a big level, 2420, that we cited here last week as well. Now, weighing on the Russell more than others is the crude oil, but for the NASDAQ, I think you started to see tech go when the bond market started moving lower. You have a nice steepener in the yield curve here today. New York Empire State Manufacturing was better than expected. And as well, likely you could be seeing a little bit of a move in the bonds because you're seeing crude lower, some of the inflation narrative coming out of that. The dollar's also stronger. And the data last night, like we cited on the Morning Express, China industrial production beat expectations. So a number of factors that could be moving the bonds down. But what you're seeing, again, is a steepener out there, and that's healthy for the market. And crude oil, let's focus on that now, is lower in the session. It's bouncing back. Watch for this 80.75, 81.17 area, a big point of balance for the week. And below there, look for it to consolidate lower. So you have a number of fundamental headwinds that the market is facing at the moment. And we pointed out in the Morning Express where we'd love to be a buyer. May not get there, but this is a place we would love to be a buyer. So check it out there. And then gold and the metals, man, gold is holding up extremely well given what the dollar's doing. We talked about this. The dollar's breaking out, likely going to head to 96. It's trading higher by a quarter here today, and gold doesn't care. Gold really doesn't care at all. In the bonds lower, gold doesn't care. Gold seems to be doing what it wants to do, and that's trading higher right now. 1868 has been sticky. So has been 25 and a quarter in silver. So watch 1868, 1870 on a closing basis through the next day or two. Retail sales tomorrow is going to be big for gold as well. Close above 1870 is going to signal that we're heading to 1900. Give us a call, though. Our trade desk is here to help with anything on the board. 312-278-0500. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.